Good evening or good afternoon, colleagues, and I will indeed address you as the outgoing colleague, but I don't think I will be outgoing and disappearing unless I'm just forgotten because I've reached my sell-by date. But I believe that we're doing a very interesting work that one would always believe that needs all hands on deck. I would wish to just indicate that it is a privilege for me to be here and to be engaging with you and consuming what is going to be presented to us, engaging in debates that may come from the panel, all in the spirit of ensuring that we all make our contributions to make the system better and make it serve the communities that we all have pledged that we would like to make a contribution to serve. So in terms of this event, I feel that your presence here also signifies the importance of the outcome of the intervention, this specific intervention, as part of periodic assessment that was last conducted, I heard, in 2021, and we have the key objective of supporting the interventions that have been embraced by the SADC Payment System Subcommittee under the auspices of the Committee of Central Bank Governors of the region. And of course, as Brendan indicated, this interest coming from beyond, because I believe that we are in a global space, and we believe that from the global partners, we can hold hands and ensure that we make the system better. Based on the introduction, I would like to appreciate the opportunity that I've been afforded over more than a decade to play a role of holding hands with colleagues in the SADC interventions. This has been fulfilling, I must tell you, and I'm going to touch on some of the difficulties that we still face, but I'm by no means saying that they're insurmountable. I think we're going to hold hands and we're going to go over them. And maybe I'll glow a little bit and tell you about those that I feel that we achieved. So our efforts, as you know, in SADC are underpinned by the Finance and Investment Protocol, and specifically Annex 6 of that protocol that calls upon us from the payment space to assist member countries to develop their domestic payment systems and further ensure that those systems are integrated or interconnected in the region. And in this quest, it is said that we would contribute meaningfully to trade and investment in the region. And in the context of what we're going to be discussing today, would be contributing towards the livelihoods of the people that otherwise are underserved or need those services more specifically when we talk about remittances. As you know, the consumers of the payment services and businesses needs to be afforded seamless, affordable, safe, real-time payment services. And this aspect, as you know, has been elevated through the agenda in the G20, where the cross-border payments roadmap and the building blocks and the targets have been set for us to all pursue and ensure that we move the needle in the right direction. And in that context, as you know, payments have been grouped into 3 categories. We have high value or wholesale payments, we have low value payments, but it was thought prudent that remittances should be a separate category because they have specific peculiarities that we need to focus on. And you may also be aware that during our presidency as South Africa of the G20, we have also seized the opportunity to focus our efforts on advancing progress towards the achievement of the targets through undertaking, amongst others, something that is more close to what we're talking about today and close to Africa, we're saying an initiative that sets out to leverage granular data about regional markets or payment corridors to understand the specific challenges that require tailored interventions that address specific frictions that are in the system. And the nature of the assessment that was conducted through Framework Trust is one of those regional interventions that source data that will serve both the region and other global organizations well in fostering the understanding of the underlying challenges and the frictions that negatively impact the remittance market in this context, specifically in SADC. But I would like to reflect on the broader issues and believe that this is something that needs to be put forth and we put all hands on deck to try to resolve. To my mind, at the core of the payment system development journey for our region, we are giving focus at the moment to the digitization of the first mile, middle mile, and the last mile of the value chain. And in these efforts, we wish to minimize the role of physical cash in the value chain and bring efficiency into the system to minimize cost of the transactions and enhance the speed of conclusion of these transactions. These efforts are specifically focused on frictions that arise from the cash in and the cash out activities that largely compound efficient processing of remittance transactions. And I wish to indicate that visible progress has been made in reforms that have been undertaken to enhance the middle mile infrastructure. And in this process, payment rails have been developed and implemented in this area, and efforts are underway to enhance and fine-tune these platforms that we have managed to launch in the middle mile. However, there are some things that I normally call hygiene factors that need to be addressed in the first and the last mile of the value chain. And these interventions are crucial as they would contribute to enhancing the effective building blocks that needs to be put in place regardless of whatever solution that we need to implement. And in this regard, I would like to reflect on a number of these aspects that I said are hygiene factors because they are foundational in addressing effectively the ecosystem and laying the foundation to realize effective systems. I don't wish to reflect on this in a sequential matter of importance because they are all important. They all need to be undertaken. Don't read, if I say first this, second that, it means it's in the order of priority. But first, I believe we need to enable non-banks to have access to service provision independently in all possible aspects of the system. And in the cross-border context, this action needs to be undertaken by all member states in their individual environments to enable this so that we broaden the net and maybe even enhance competition. Secondly, we need to harmonize our legal and regulatory frameworks, including KYC protocols across member states in the region. This aspect needs to be embedded in conjunction with entrenching a uniform application of a risk-based approach broadly in the system and specifically as it relates to money laundering supervision. Thirdly, I would indicate that we should undertake reforms to address gaps in domestic frameworks that would support our integration efforts into the region. Next, we should identify and address policies that will boost financial inclusion of migrants and macro, small, and medium enterprises for cross-border payments and e-commerce. In addition, We should identify and provide incentives to frontline service providers to ensure that they are enticed to come into the system. They stay in the system and they make a difference where it matters. And in this regard, I normally say that specifically from the regulatory side, when we come with regulatory positions, we should always have as top of mind that the solutions that we envisage should be commercially viable and sustainable, so that the parties that come into the system can be enticed to do so. And lastly, I would say that we should put efforts into driving financial education for both merchants and consumers of the service. And let me mention here that a difficult aspect that needs to be given concerted effort relates to regulatory alignment among regulators in the payment system. We'll take the payment system regulators, we'll take the money laundering regulators, and I've added as there the capital control regulators, or those regulators that are charged with the responsibility of curbing illicit flows. These regulatory bodies need to come together because we recognize that the regulatory objectives of these various regulators may sometimes be misaligned and should, however, foster collaboration by these regulators to avoid fragmentation in regulation and overburdening the regulated sector. Notwithstanding the challenges that need to be addressed, I would like to indicate that we can be proud that as a region, we have made effort and implemented infrastructure that is foundational for us to be able to lay a solid ground from which we can put the other measures around and ensure that providers of services can compete on products and services. And as I stated earlier, the investment in time spent on the building blocks and implementing the infrastructure needs to be equally supported by enabling regulatory reforms that comes from the regulators, the likes of central banks. Now, if I just reflect, and I'm going to repeat some of the measures where we are as the Payment System Subcommittee in SADC, I'll indicate that we are executing our initiatives through a strategic approach that is set by governors in a 3-year cycle. And at this point in time, we are focusing on initiatives that are aimed at fostering integrity of transactions in the region, fostering financial inclusion, and promoting innovation. These are initiatives that the governors have placed on the lap of the Payment System Subcommittee for us to foster forward. And amongst the initiatives underway is the focus looking at the non-bank participation in the system. And as I indicated, that each member country should ensure that their regulatory frameworks is enabling for these parties to come into the system. And we have the model law that we all can actually leverage in making these changes. And unfortunately, we're still experiencing delays in these regulatory reforms, and the non-bank participation is not at a stage that we would have loved it to be. But I believe we are putting all effort to ensure that the end goal is realized in the not too distant future. Further, we're looking at aspects that relate to the improvement of the anti-money laundering interventions, the know your customer practices and capabilities that we need to ensure that we embed in the system. And the Payment System Subcommittee is prospecting development of a SADC KYC-wide and identity including information sharing arrangement that would be operationalized, hopefully, in the not too distant future. And it has also been widely observed that as the cross-border payment landscape is regulated in this fashion that I mentioned, we have requested that we align the regulatory objectives of the various regulators. And in this respect, starting in the CMA, the governors have pushed us and given us support that we bring interventions that will ensure that the regulators come together to align our objectives and hopefully remove any possible fragmentation that the regulated sector observe in that regard. The SADC, at the SADC level, we intend to continue to collaborate with the regulated sector and ensure that the solutions that are brought to the fore are the solutions that would effectively address the challenges and the frictions that we have identified. I believe, in a nutshell, the takeaway that you can take is on what we as central banks and regulators can do. And we believe that the providers of payment services, if they provide it with the right platform, also have an objective of ensuring that a system that makes the right impact is implemented. Of course, we know that the regulated sector would also be challenged because they need the commercials to be right. So we hope that they balance that equation of the right thing to do and ensuring that their bottom line is where they would like it to be. I would conclude, Brendan, by indicating that I believe that the necessary interventions that I've highlighted are on point and will yield the desired impact. And as we launch this report today, and I'm keen on learning what is in the report, that will be shared with us. This is at the cornerstone of supporting the CCBG Payment Subcommittee strategic focus areas on financial inclusion, where access to data, especially in tracking the trends in access, cost, transparency, and speed, is key for central banks to drive the necessary reforms and to move the dial for the end users. And I hope a broader spectrum of regulatory authorities will use the highlights, the insights drawn from this study to bolster their action plans. The study builds on a rich history of research conducted by Finmark Trust in the past on regional remittance markets and systemically examines the changes in prices, pricing mechanisms, regulatory frameworks, service provider strategies, and technological innovations to provide a comprehensive analysis of the dynamic cross-border payments landscape. I believe the granular data and the information that is gathered through various avenues such as this one is very useful for regulators and financial service providers to invoke the necessary interventions to enhance financial inclusion and optimize cross-border remittance services in the region. I'm confident that with the next iteration of the assessment and progress that we will see there, significant positive gains would have been made through collaboration and our long-standing relationship with Finmark Trust and the relevant SADC community. I thank you, Brendan. I hope what I said is aligned to what we will get. Thank you. Okay, thank you.
Does he sound like someone who's outgoing? I mean, jovial and all of those things. Thank you very much, Tim. We're now going to have Damola Wolade. Damola is the head of the SADC Payments Program in Finmark Trust, and this is his labor of love. Putting together and doing this research is a huge undertaking. And Damola has lots and lots of sleepless nights to get here. Hopefully he doesn't fall asleep tonight. Also, just to say, FinServ, we owe big thanks to FinServ, the department, for making the data available for the research. I must say, data over the last, because we've done about 4 or 5 of these over the last decade, and the data has improved consistently over years. So the data that we have now, I think, is a lot more accurate than what we had before. So thank you very much to FinServ for doing that. Damola, over to you.
Thank you, Brendan, and thank you to everybody for joining us this evening. My name is Damola Olade. I manage the SADC Financial Inclusion Program at FINMARC, and this particular piece of work is one of our flagship programs as far as our projects is concerned in terms of contributing to the regional integration efforts with the region and collaborating with the CCBG and the SADC Secretariat. So a lot has been said already as far as the impetus and the motivation for this work is concerned. So I'm just going to go into the content specifically. So there'll be some introductory remarks. I'll go straight into what the market size looks like and giving some perspective on the dimensions of formal and informal. We'll go into the remittances pricing. We'll touch on the speed and transparency. And then we'll try to scaffold what we're finding with some of the regulatory trends and what's also happening in the private sector as far as the service providers are concerned. And then we'll try and tie all that together with summary findings. So with the introduction, I mean, a lot has already been said around the UN SDG goals as far as pricing is concerned, the G20 roadmap, and building blocks on expanding cross-border payments. This also ties into the SADC financial inclusion and access to SME finance strategy between 2023 and 2028, of which remittances and access to remittances is a critical component of. But obviously, we need to consider this in the context of what's really happening as far as migrancy in the SADC region is concerned, and South Africa being the largest recipient of migrants from the SADC region, which then means that there's a need for people to send money back home. And in some of the countries in the region, particularly the countries that sent the most migrants, we're starting to see from a macroeconomic perspective that remittances is starting to overtake overseas development aid, which then makes this quite a critical a conversation point for us as policymakers and market facilitators. And as far as this work is concerned, and Brendan talked about inter-Africa corridors, we've taken the position to look at South Africa to the rest of SADC as the corridor that will be basing this analysis on for a few reasons. We don't have the budget to do the different permutations of the different countries within the region. And South Africa being the largest recipient also makes a lot of sense in terms of the volumes that is leaving South Africa and going into the rest of the region, which makes the first mile a critical conversation area as far as what happens in South Africa and how that can enable access and as far as how that could also influence the cost as well, and particularly issues around speed and transparency, which is also important. So I'm not going to belabor some of these ideas here. I'm going to go straight into the research methodology. So our methodology here is really to focus specifically on the 4 drivers that the G20 or barriers that the G20 has identified as the aspects that one needs to resolve to move the needle as far as creating efficiency as far as cross-border remittances is concerned. So the first one is access. And as far as accessibility is concerned, we can think about that from the perspective of the actual individual that is sending the money and their ability to access remittances services. And within the context of this research, if we think about migration and the fact that it's actually a flow concept, it's not a stock concept, it's quite difficult to actually have a good handle on the number of migrants in South Africa, and that is always, it's always a moving target, so to speak. And it's also quite difficult to be able to conduct surveys that would cover all the different types of migrants. So you also have the undocumented migrants that might be running away from authorities that probably would not want to participate in a survey kind of context. So a lot of our access data is really based on the SARB's FinServ balance of payment data. So we're really working with volumes and value data there. So that is really what kind of informs the accessibility. So you'll be seeing quite a bit of information around volumes and values of remittances going from South Africa to the rest of the region. We do use a small qualitative research to get some kind of demand side perspective as far as the behavioral patterns of some of the migrants from 3 of the corridors out of the 15. So we looked at Mozambique, Malawi, and Zimbabwe, which actually make up the top 4, if you add Lesotho to it as well, to kind of get a sense of the decision making around their choice. So what informs their choice of using formal or informal, which kind of then helps to give us some semblance of general equilibrium kind of analysis around access. We also look at the Stats SA data as far as the census figures is concerned to help to extrapolate on what the level of migration looks like now. For cost, speed, and transparency, we used what we would call mystery shopping, where we looked at FSPs across the license categories, so authorized dealers, and the other ADLA categories 2, 3, and 4, that then fit into each of these license categories. And then we proceeded to send actual funds through these FSPs to be able to get a sense of what the binding codes as far as pricing is concerned, what the experience was as far as getting onboarded, what was the level of transparency, and what was the speed of the transactions themselves. And then for some additional context, we had to conduct some key informant interviews to get the perspective of regulators, policymakers, and the financial service providers. Furthermore, as far as the methodology is concerned, we thought it was also important to maybe share this dimension as far as how we think about remittances from a framework perspective. So we have the first mile, we have the middle mile, we have the last mile. And South Africa serves as the first mile, where you have the sender specifically, where the sender is actually effecting the payment. And then you have the middle mile, where you have the foreign exchange conversion, you have the settlement and clearing, and then the last mile is where the recipient is receiving the money. And this is quite important as far as speaking to some of the factors and drivers that Bratim was referring to earlier. So at some level, you might find that from an accessibility perspective, the licensing regime in South Africa might influence the entry barrier for non-banks or banks to get licenses to participate, which will have implications for accessibility. As an example, for the non-banks specifically, in terms of what the regulatory regime looks like, their investment in cash in, cash out outlets, for instance, might have implications, which would be applicable to the first and the last mile. As an example, the use of the middle mile infrastructure, say TCIB as an example, might have an influence on the total cost and the speed, and to what extent is there any adoption of that could have implications for the previous slide as far as those 4 dimensions are concerned. Exchange rate margins, the kind of partnerships that the FSPs might get into would have implications for the 4 dimensions that I've described earlier. And this next slide just tries to put all these into context in terms of what I was just referring to, the level of competition, the kind of pricing structures, the kind of business models that unauthorized dealers would go with, or an ADLA will go with, the level of interoperability. We do find from the evolution of the remittances market from SA to the rest of the region, there's been, you have the legacy commercial banks driving that process until the mid-2010s, where the Adler licenses were issued, which then diversified that space, which then led to some level of fragmentation of the rails in a way. And that has implications for the kind of business models that the different institutions might have, and has implications for cost in the end. Foreign exchange controls would have implications for whether users want to maybe perhaps make use of the formal or the informal. To what extent, how much money can I send? The AML regime, so to what extent are we using the risk-based approach? From some of the research we've done, as an example, we find that the Adlers tend to be much more amenable to using the risk-based approach as opposed to the commercial banks, as an example. So this slide just helps to kind of just shape some of the commentary that I was given as far as how this applies to the first middle mile and the last mile. So now going straight to the meat of it, the data that we're using, as I said, comes from the balance of payments database. And on the right panel of your screen, we have the balance of payment codes that are germane for remittances or identified as what would encapsulate transfers to a natural person and not a merchant payment. So the 305 and 306, which is compensation paid by a resident to a migrant worker employee excluding remittances. Actually, the reason why we've included that in this case is that when that happens within the environment of a bank, it's actually not a remittances. But the non-banks, the Adlers, have been allowed to use 305 and 306. So which is why we're including that in the codes designation for remittances. Obviously 401, which is gifts, we started including alimony as well, which is obviously a person-to-person transaction. 416, migrant worker remittances. 417, it's something that when I use my app, Standard Bank app, I'm usually put under 417. And 418, value transfers, really speaks to some of the innovations that South Africa has actually put in place in terms of value remittances, where you can actually transfer goods and not necessarily money in itself. What is also quite interesting with the SARB data, the FinServ data, is that we have additional data dimensions like gender. We can look at cash versus digital channels, that is transfers that emanate from someone's account, a store of value. We also have currencies, and we can also look at the originating province in South Africa to get a sense of where the migrants are. Maybe one more thing I can say here before I move on is that the gifts and the migrant worker codes are usually typically the codes that are mostly abused because the Adlers might not know where to place the user, and they would just kind of bucket everybody in gifts, as an example. And it would be interesting to maybe get some of the codes from the service providers themselves, because I know that they get a bit more granular as far as the reason for the transfer is concerned, to maybe then reconcile it with how the SARB then aggregates this. But I think that could be an interesting exercise as we look at this down the line. So this slide looks at the RAND values from 2016 to 2024. We've segmented them into 3 panels to then look at the large corridors, which is on the left, and then the intermediate corridors with South Africa and the small corridors. So the overall total from South Africa to the rest of the region basically increased from 6 billion in 2016 as an approximation to 19 billion rand in 2024. Some of the reasons for that, it kind of runs across many dimensions. So there's been improvement in the data management of the FinServ, which reflects in some of the data we see. So for instance, prior to 2021, we got card transactions in a separate database from the balance of payment database. And we had to do all kinds of statistical gymnastics to reconcile that. And now they've been harmonized in some way. So an example of that is someone going from South Africa to the rest of the region to use their card. How does one separate tourism, as an example, or merchant payment from an actual remittances? And those are the kinds of issues that might be influencing some of the flows that you see. But then maybe going specifically to the markets, the top 4 markets are Lesotho, Malawi, Mozambique, and Zimbabwe. And you can see that COVID had an influence as far as the trajectory of the line graphs there is concerned. Zimbabwe is the light green there. And what is interesting maybe to mention here is the fact that from a large corridor perspective, you see an upward trajectory with the exception of Malawi, where you start to see a dip in 2021. And some of what we found there is that there's been some kind of crunch in terms of their foreign reserves and their parallel forex markets that are happening, and people are moving into the informal remittances market to be able to get more bang for the buck that they might be sending from South Africa to that region. We have some nascent corridors. If you look at the intermediate, specifically Tanzania, Zambia, in terms of what the values are looking at. And those intermediate countries, it's also a function of the fact that you might find that there's a bit more migrancy from some of these countries into South Africa, and the expansion of the service provider ecosystem to some of these countries. We do know that the DRC has a full-fledged Awala kind of ecosystem, but it's interesting to see that there's a bit more move into the formal space. Namibia is quite interesting, maybe to mention in terms of the little spike, the inflection point that you see on the right panel. And from our understanding, this is really a function of the fact that prior to late last year, transactions from South Africa to the rest of the CMA were essentially domestic transactions. They were settled within SAMOS, and since then the reporting then became cross-border reporting, and that kind of been reflected in terms of what we see for Namibia. And I think you can also see that there's a proximity effect as far as the size of the markets are concerned. The countries that are pretty far from South Africa are the smaller markets, which makes sense. That's probably not where a lot of the migrants will come from. And the countries that are contiguous with the borders of South Africa are the biggest markets. I try to show this with the volumes, and I think it makes sense to kind of give a perspective of value and volumes. With volumes, we've also seen quite a leap in terms of the total numbers. So 4.7 million transactions in 2016, and it's now 15.6 million. Again, the dimensions as far as the different markets remain the same. But what is interesting in terms of the volumes and values is that you'd find that in some countries, the value is a bit dipping, but the volume is going higher. And it could be an indication of more frequent usage. It could be an indication of lower income folk using the formal financial platforms, remittances platforms, which could be indicative of the fact that the market structure is being calibrated to drive financial inclusion at the first mile. And this particular slide makes the point. And I would want you to maybe look at the scale at the bottom in terms of the actual Rand million. So here we look at the average transaction size. And if we compare the average transaction size in 2016, which was also kind of around the I would say 900 rands to about 2,000 rands. I mean, 900 rands would be, give or take, $40 to about $100 at the upper end in terms of where a majority of the average transaction sizes lie, which means that even from 2016, we're seeing an ecosystem that is meeting the needs of a migrant segment that is actually mostly undocumented, working piecemeal jobs in services sectors. And we would also see in subsequent slides that there's been an expansion in the services sector in South Africa and an increase in the migrancy of women into South Africa. And we're seeing more women sending money back home as far as the volumes and values are concerned. But the point here is that there is an expansion within that particular average transaction size point if we compare the 2016 to 2024. We were speaking about cash and digital, and this slide provides some perspective around that too. And there's quite a number of factors that is driving this. So you can see that the remittances market is mostly driven by cash transactions as opposed to digital or transactions that emanate from someone's store of value. And it keeps increasing. The cash doesn't stop. And we see that the cards are coming up, and that could be a function of some of the adlers that are getting sponsored banks and having issuing prepaid cards to some of their customers. But that would mostly be documented migrants that have the right to work in South Africa that would meet the AML eligibility criteria to have a store of value as an example, which speaks to what Brad Team was talking about earlier as far as allowing more non-banks to offer wallets as an example, and also looking at the appropriate AML regime to kind of support that process as far as, looking at the true spirit of the risk-based approach and how that could actually drive some of these cash transactions into non-cash or digital transactions. This makes the case for it. So doing that same cash digital dichotomy across the large, intermediate, smallest markets, you can see that the largest market is mostly cash. If you look at the blue bar there, the intermediate is also mostly cash with the exception of Mauritius, and the smallest are mostly cash. And there's a little nugget of information that I could share here. So, once you're using a bank, if you're using a bank service to send money, then you are sending that money from your account. And that transaction is likely to be digital. So if you're seeing this ubiquity of cash, it means that it's the non-banks doing this. So essentially the non-banks are driving access to remittances from South Africa to the rest of the region. It's not a bank. Banks are not playing a significant role in this. Although we do see that you have a bank retailer model in the South Africa Eswatini corridor as an example, in the South Africa Lesotho corridor, where the bank assists with settlement, but the customers can go into a ShopRite in South Africa, and the recipients can receive at a ShopRite in Eswatini and Lesotho, which is technically captured as an authorized dealer transaction, but really it is a retailer that is kind of enabling, catalyzing that. So that kind of gives a perspective on the formal. With the informal, and really, to be quite honest here, as I've mentioned, our estimation of informal in 2021 was 11 billion, and now we estimate it at 3 billion rands. However, the methodologies were different, so they're actually not comparable, full disclosure. And to be able to assess informality, it requires us to close the borders of South Africa for maybe 2 years, and then force the illegal or undocumented migrants to participate in our surveys for us to know how they send money. So it's very difficult to have an estimate that we can be confident in, although the inflection that the COVID lockdowns actually moved people from informal to formal, and that kind of provides a perspective as to how the informality might have decreased, as an example. And we know that the irregular or undocumented migrants are also less wealthy. So their values that they're sending will be also quite small. So for us, in terms of sense checking what that estimate would look like, we see it as about 3.4 billion now, and we'll take that with a grain of salt. Okay, so I mean, I've been talking about volumes and values. I've given a perspective on the informality, but it's also important maybe just to kind of say a few words on the migrant profiles. So you can think of someone that's coming to South Africa for tourist purposes, and you're probably here to stay for 3 months, but you might find that you go quickly to Mozambique to come back, and then you work. That person is not likely to be able to access a store of value, and they might want to maybe send money home while they're doing short-term work in South Africa. And we find that it's the non-banks that are likely to support that individual. Someone that has a right to work is probably going to have a bank account. You have asylum seekers and refugees that are legitimate, and the AML laws actually recognize them, so they're also likely to have a bank account. And then you have people that have jumped the borders, and they make up about 90% of the just sub 4 million migrants that we estimate here. So a lot of the potential market for remittances in South Africa is actually 2.5 million undocumented migrants, so to speak, or people that are coming in and out. And one needs to think about how to support that. We also know that a lot of migrants that come into South Africa serve as diaspora traders. So they stay in South Africa and act as agents for their family members or their networks back home that could either send goods to South Africa for sale, and the funds then gets repatriated, or they go do trade outside of South Africa, and funds needs to come back into South Africa. And what we know from the work we've been doing, given the structure or the ecosystem of financial inclusion in the SADC region, so South Africa is somewhat of an anomaly, as an example, in the fact that the banking penetration is quite high. Outside of South Africa, it's mobile money that is driving financial inclusion. So it is really the non-banks that are also the mechanisms for this trade transactions. So the volumes and values that I was speaking to earlier that we might find in the gifts balance of payment code could be masking cross-border trade. And we believe we should be looking at how to actually disentangle that and how to kind of look at policies that can maybe resolve and separate those codes, or perhaps have the Adlers and the non-banks have a bespoke balance of payment code to capture low-value cross-border trade. I think I already mentioned about female remittances, which is also increased, which is really a function of the migrancy here. So now the pricing. With the pricing, we did speak about the mystery shopping methodology here. The total cost or the total pricing is based on the direct fee and the exchange rate margin of the FSP. And we look to then address that by trying to disentangle these two aspects. And then what we've also done, which is slightly different from what other institutions might do as far as a pricing assessment is concerned, is to weight the pricing. So at a corridor level, when we look at South Africa to specific corridors, Angola, Botswana, what we've done, which is quite important actually, it kind of distinguishes what we do from most people, and it's also thanks to the FinServe. What we do is we look at the transaction values across the different license categories. So when we do the mystery shopping and we have actual price points for each institution and how they fall within the different license categories, we then weight the total pricing by the values. So the license category that has the highest value will carry a higher weight. So for instance, in the Zimbabwe corridor, where the values via banks will be smaller compared to an Adler 3 license, we cannot have the same weights across the board. So that is an important kind of distinction on how we do this. And when we look at South Africa to the region as a whole, we also do the same weighting. So we would weight by the size of remittances flows to the corridors themselves. So Comoros cannot have the same weight as Lesotho, as an example. So maybe just to kind of mention that. And, just a bit of information around what we found as far as exchange rate margins and direct fees are concerned. The direct fees have increased across the board, actually, with the exception of DRC, Madagascar, Botswana, Seychelles, and Tanzania. Malawi has shown strong exchange rate margins, and it speaks to what I was saying earlier around the competition with the informal markets. And from our understanding, some of the remittances service providers are actually taking a loss to keep their customers from not going to the informal. And some of the little bullet points there around some of the countries that have highest margins in terms of liquidity constraints, so Angola, Seychelles, and Comoros. This could be a function of the trading volumes. Those are also small markets. And we've also seen not so unexpected direct fee increase in the CMA because of the decoupling from SAMOs into cross-border remittances, seeing the CMA as a cross-border segment. Although we are also seeing some exchange rate margins. Some of the FSPs are claiming exchange rate margins in the CMA, which actually requires further research because it should be one-to-one. It should be one-to-one. It was not clear because the FSPs weren't really forthcoming in terms of why there is an exchange rate margin in the CMA. But generally speaking, exchange rate margins are also dropping across the board. And that takes us to what the corridor level pricing looks like from a USD 55 dollar, which is within the threshold of the average transaction size that we spoke to earlier. So I mean, the World Bank would look at the USD 200, but it's not intuitive for us to go with 200 because a majority of our migrants are not transacting 200 USD. So the last two columns compare our 2021 assessment with our 2024 assessment, and where we've highlighted as green is where we're seeing a decrease in the cost. But, and I'm going to go to the next slide, and we've been talking about the idea of average pricing as a dimension. However, the customer, the average pricing idea is really for us here as policymakers and being able to engage with international stakeholders as far as what is the most expensive corridor, et cetera. But from a customer perspective, customers go looking for the cheapest priced service. So it's quite important to maybe, we need to understand that we have some weighted average costs, but it's also important to look at what the cost looks like from the authorized dealers, which would be the banks. And if you look at that column, it's mostly the most expensive compared to the Adlers. And it's quite important to maybe think of this from that perspective. I'll go to the next slide from the benefit of time. We've done the same thing for the USD 200 transaction size. Same thing here. The green highlights show where we're seeing a decrease between 2021 and 2024. The teal or the blue highlights is showing where we've reached the SDG goal, where we are now within the 3% of the UN development goals as far as pricing is concerned. And obviously the reds is where we're seeing increases. And the CMA is where we're starting to see increases as far as some of the reasons we mentioned earlier is concerned. So now given a SADC-wide view on this, comparing the USD 55 and the USD 200 and looking at SADC total, looking at SADC total excluding Malawi because of the anomaly around the exchange rate margins, looking at SADC total excluding Malawi and the CMA, and looking at the CMA only, and then looking at Lesotho, Mozambique, and Zimbabwe as the top 3 corridors, and then looking at the top 4 corridors, Lesotho, Mozambique, Malawi, and Zimbabwe. We try to just kind of show where some of the data might be less biased, so we would remove Malawi in some cases. But as you can see, if we include Malawi, we look great. 9.6 in 2021 to 4.7 for our average transaction size. But if we remove Malawi, then it doesn't look so good. We're close to 10%. If we remove Malawi and the CMA, we're still hovering around 10%. If we look at the CMA only, it was actually within the SDG goals, but it's now 7.8. The analysis that left out Malawi, we didn't do that in 2021, so there isn't anything to compare it to. But when we include Malawi, our top 4 corridors are also, they're looking nice. They 3.8, but really, it is a function of the macroeconomic exogenous factors that one can't really resolve. And if we compare our costs to the other regions, you can see at the bottom left of the slide what South Asia looks like, Latin America and the Caribbean, Middle East, and Europe and Central Asia. And this is mostly World Bank pricing, although, as I've said, actually our data is not comparable to theirs because this is not necessarily weighted. They use something called the SMART average, which would be the 3 lowest priced services, and then there's an arithmetic average of those 3, but there aren't any weights there. So that kind of takes us to the last part of the presentation, where we try to speak to speed. The G20 goals is looking to ensure that 75% of retail cross-border payments are credited to a recipient within an hour, and the remainder within a day. And you know, we have a table here that shows the distinction between authorized dealers and addlers, but really the dimension here is when you have a correspondent banking relationship, it's likely to be a longer transaction. If you're not using the RTGS, it's likely to be a longer transaction. And the further away from South Africa, then you get to have those dimensions. So in the end, you'd find that the addlers that are actually cash-based, and we know that some of the addlers actually typically would have to find liquidity at the last mile. At some point, they might even take cash into the last mile as an example as well. But they seem to be doing well in terms of the immediacy of the transactions, and a lot of them actually, it's quite immediate. So not much to say here. And some of what we found could also be a function of the mystery shopping itself. And we might not be able to extrapolate to all the different service providers that are out there. So just to kind of be forthright around that. Transparency is also interesting, and I'm not going to spend a lot of time here, but what we know from our experience with the mystery shopping is that, and it's a function of the fact that the non-banks don't have a store of value. So there's nothing to take money from down the line. So we had an experience, or a few experiences, where after the mystery shopping happened, a month later, there's a debit on the account of the sender linked back to the remittances service, which kind of gives a sense of lack of transparency as far as a transaction is concerned, which is very different for a non-bank where there's a binding quote from the onset and there isn't nothing to take money out of going forward. But generally speaking, we have an ecosystem where the level of quality is quite great from a bank perspective and the addlers, although the addlers are not necessarily, or the banks are not necessarily utilizing the risk-based approach. We also don't see a lot of investment in seeking out where some of the migrants might be. So the addlers have investments in roving agents that are actually looking for the market and engaging with the migrants where they are and making it quite easy for the migrants to be able to actually use the formal platforms as an example. So maybe something to say there around the level of transparency and the overall quality of service, where particularly for the kind of clients that we're trying to bring into the formal space, the Atlas are somewhat doing better. The last few slides try to maybe speak to some of the things that Brad Tim might have actually mentioned, and it's not worth maybe belaboring them, but some of the things that one needs to maybe anticipate around the regional eKYC framework and the regional data sharing framework that might actually help to support the ethos of the risk-based approach and ensuring that customers are not anonymous, is the fact that if you're a migrant and you're not picked up by the Home Affairs and you're in South Africa, it should be easy for an FSP in South Africa to be able to verify you by connecting directly to your Home Affairs or your civil registry. And we find that in some of the countries, there are data localization laws, and these are some of the aspects that we might want to maybe resolve within the CCBG. There's the RTGS renewal program, which the Payments Ecosystem Modernization Project kind of has an implication for, and that could also look at how the non-banks could start to offer wallets, and those are things that we can anticipate that could also change the landscape. We find that we need more application of the risk-based approach. The gray listing obviously had an impact on increase in compliance, and that might have effects on what we've seen as far as the volumes and values are concerned, and obviously the CMA decoupling. As far as service providers is concerned, we've seen an increase in the number of participants from 48 to 55, which might mean increased competition, which could have influence on some of the pricing. We're seeing a lot of partnerships. We're seeing some of the Adlers actually invest in e-money licenses at the last mile, where they're now having somewhat of a closed loop infrastructure that is serving the needs of their clients. And it becomes quite difficult to convince some of these guys to move into, say, like a TCIB as an example. So how does one do that? How does one realign business models that has been set up for how the market looks and then going backwards on that? There's a lot of partnerships with Adlers and mobile money operators at the last mile as well in terms of terminating some of these transactions. And we're seeing improvements in the level at which FSPs are also able to conduct their AML and CFT risk assessment in South Africa. I'm going to close this session with just some a summary. So we've underestimated informal remittances, and if we're underestimating that, we really don't have a sense of what the potential could be, although the yardstick for us would be maybe the rates of change or the growth rate of formal flows as far as volumes and values is concerned. But it requires investment in ongoing research around the migrants in South Africa, and the FinMark's FinScope could be a place to look at for that. In terms of maybe just investing in including a module or having a full-fledged survey to track that. As I've mentioned, there's a lot of cross-border, low-value cross-border trade data in the balance of payment codes, and we need to disentangle that. We need to look at ways to resolve that. The impact of the CMA decoupling, we need to be investing in much more impact assessments, an ex-ante impact assessment prior to the implementation of policies to have a sense of anticipating what the unintended consequences would look like. There's the increase in cash-based remittances, as I've mentioned, the activities of Awalas. How does one look at bringing them on board? And Adri might be speaking to some of that in terms of what the FinServ is looking at. Again, the offering of wallets by non-banks and the potential partnerships of Atlas with some of the non-banks that are already playing in the payment system, which actually shows the importance of the connection between a domestic payment system and the regional payment system. And we think of them as fragmented, but they're not so fragmented. And one needs to be cognizant of that. This is quite important. So, again, with the cash thing, even with the domestic payment system, we find that we say this financial inclusion and people are using formal platforms, but they typically use it for cash distribution purposes. And a lot of our countries do not have fully developed merchant payment ecosystems, which means that when people get money, they take it out and go use the cash. So one needs to look at how to develop the merchant payment ecosystem from a domestic perspective, which would then have implications for a migrant to even want to use the digital first mile service, even when it's there. Otherwise, they're not going to use it, or they might look at alternatives. And I think even from a cash perspective, we also need to maybe rethink how we think about cash and digital. So the retailer model, where the ShopRite model, which is a cash model, because the payout is actually based on the cash intake from ShopRite making sales during the day. So we found, and this is something that we might discuss in the panel just now, we found that there are a lot of queues, and people are coming from rural areas to then take the money out, and we're looking at how to maybe digitize some of this last mile transactions. But ShopRite is not trying to do that because they want to keep customers in their stores. So how does one look at that? How does one then separate that? Okay, this is going to be our cash market, and this will be the potential threshold for those that could move to digital. And what are the percentages of those different markets? And how can we look at moving people? And what would be the steady state of people that are in cash? And what would be the steady state of people that are digital? I think a lot of this stuff Brad Tim has actually mentioned. I would just wrap up to say thank you, and we'll probably just move to the panel for the benefit of time. Thank you. So for the panel discussion, I'm going to invite our panelists to come here to the stage, and I'm going to start with Mr. Arif Ismail, who is the incoming head of the National Payment System at SARB, Ntate Mutetsi Sekoati, who is the director of the Payments and Settlements at the Central Bank of Lesotho. We're going to have Ms. Adri Potgaita, the acting division head, the Adler Supervision. And then we're going to have Nikki Kettles, who is the executive for license and payments regulations at Mukuru, to give a private sector flavor to the conversation. Okay, so thank you. Welcome to the stage. I just want to pull up your questions. In terms of the way in which we want to structure this, obviously we've provided some feedback around what we found. We were a bit deliberate in terms of the crew that we have up here. We thought it was important to have the incoming CCBG chair and the incoming MPS lead to provide a perspective in terms of his vision and where we want to go, the continuity aspects of it. We thought to have Ntate Sekoati from Lesotho as far as the CMA dimensions that we've discussed, to also give a perspective on the decoupling and how we look into that. We thought to speak to Ms. Potgaita around the Adler the licenses and particularly the mutual evaluation report and recommendation 14 and the need to bring the informal money value transfer operators into the formal space and what that means even from a FIC amendments perspective. And I wanted to be provocative and then get the private sector to maybe be to give us a different perspective, or to maybe give us a sense of how the private sector might react to the kind of positions that our panelists have. So to start off, I'm going to start with Mr. Ismail, and my first question is, Mr. Ismail, maybe describe as the incoming head of the National Payment System at the SARB, thinking about the importance of the first mile and some of the nuggets of information that we've shared around the domestic payment system. It actually is quite important for cross-border payments, and the need for access to a store of value, which actually enables participation in that payment system, especially around the diversification thereof. Maybe you can go into some of the mechanisms in which the payment ecosystem modernization program can expand access to formal remittances and enable increases in the use of the digital first mile solutions from South Africa to the rest of the SADC region. You have about a couple of minutes, maybe 2 to 3, to give us a perspective on that. Thank you.
Thank you so much. And I have to pick on you. I've never heard anyone butcher potgieter as much. I have to pick on you, but thank you for the labor of love. Let me be a bit provocative, Olano. How many of you have not heard of the PEM? Just put your hands up. Cello, did you put your hand up? Okay, so great. So I guess Damola, the PEM really is about digitization, and especially of the first mile. What are the 3 things that the PEM can do in order to address some of the issues that you put up? And it was quite interesting for me that of your summary of findings, 4 of the 9 issues that you raise actually are about cash. It's quite interesting. So I would say that the 3 things that the PEM can do that I think can start to address the first mile issues, and you're absolutely right. I have to completely agree with you that we cannot segment what happens in the cross-border space and think that it's only related to cross-border matters. What you do in the domestic space really matters. So 3 things. Bracha mentioned the first one. We can bring in non-banks into the ecosystem. And then the question is, well, is that just about access and it's just about competition and so on? And the answer is no. It really is about innovation, especially from cash to digital. So the first thing is about the access to wallets. And if I access wallets and I use this in my daily, on a daily basis to book my rides, to book a meeting with the dentist, and to pay, okay, that starts to change the dynamic. So wallets are quite important. You can just imagine, from your labor of love, you can just imagine the ability to do a remittance simply by clicking on a contact, putting in an amount and sending. So e-money from a wallet is fundamental. Okay, and I think the PEM through the NPSD as well in terms of regulatory changes is going to really focus in on that. So that's the first thing that I think the PEM and the NPSD can deliver on. The second one, and it sounds so subtle and you mentioned it, okay, it's digital financial ID for all, whether I'm documented or whether I'm undocumented. Now you can just imagine what that would mean for someone who's undocumented. I can connect away from the informal systems. I can connect, and yes, there might be limits, but I can connect, I can send a digital transaction, and I don't need to keep bringing documents on an ongoing basis. And I think the third thing that the PEM can do is certainly continue to impress the importance of faster payment systems, right? Especially the likes of PayShap domestically. If this becomes not just account-to-account transactions, electronic to electronic, but it starts to see the shift from cash to digital, then I think we're beginning to change the game. So in short, I think those are some of the things that the PEM can do. Thanks.
Thank you. Thank you for that. I'm going to move to Ntate Sekoati. I'm going to ask about the decoupling of the CMA transactions from SAMOS and going into a cross-border dimension and what we've seen as far as the increase in cost is concerned, and Lesotho being a key corridor as far as the values and volumes are concerned. What are your what is your position as CBL as far as that is concerned, and how do you think this can be resolved, or what are the interventions that one can then pursue to see how to perhaps reverse the unintended consequence of what we've seen with the CMA decoupling?
No, thank you very much, Damola. I think from start it's worth highlighting that this decoupling has actually affected the strides that we have made in terms of the G20 targets, particularly if you look at costs and speed. That was the biggest impact. And this is specifically because we are moving from a base where the transactions were zero-based. You could say the transactions the costs were free in a way. So now with treating them as cross-border payments, you are actually introducing a couple of gates due to now you go into correspondent banking or other mechanism, including AML and CFT issues. So that affects the transaction speed as well. So now transactions are taking longer. But having said this, in terms of what you have presented here, this is affecting transactions that are going through the banks. And as you have noted for Lesotho, these remittances are not actually moving through the banks. They are mainly through the Atlas and other mechanisms. So in that regard, there's not really been much impact. But so this has actually impacted trade-based transactions where you're actually transacting. So it actually slower movement of goods and services between Lesotho and South Africa. And I think the data that you have shared has also shown this that I'm talking about, that in terms of costs, costs in the CMA are now slightly higher. And we've enjoyed really lower costs in the past because of this. And as a result of that, at the regional level, we are undertaking several initiatives. Some have already been mentioned. The issue of exploring the EKYC and data sharing. This will help a lot. This will help a lot going forward. But there are some other immediate actions that we have already taken. For instance, some of the transactions are going through the SADC RTGS, and we have tried to see if we can have some special dispensations for some of these transactions to be probably treated with some special pricing. There are other efforts which are more long-term kind of efforts. For instance, we're in discussions with FATF to see if we can at least identify CMA as a single jurisdiction to a larger extent. And we believe this would actually arrest a lot of challenges that we have. So those are some of the police positions and some of the initiatives that we are undertaking to really address this problem. Other than that, something peculiar about migrants, as you have seen, the issue of undocumented migrants, it speaks to why probably in our corridor, why most of these migrants prefer to use ATLA services than banks. Mainly because the ATLA, I think they understand the concept of risk-based more than the banks. But secondly, we want to believe that both on the first mile and last mile, they are where people are. They may not be have multiple branches, but they have mechanisms to be where people are. Yeah. Thank you very much, Damola.
Thank you. So we're going to move on to the issue of the undocumented migrants and actually some of the MER recommendations for South Africa. Recommendation 14, which highlights the need to strengthen measures to combat money laundering and terrorism financing in relation to money and value transfer services, especially for the unlicensed guys. One thing we actually picked up in this survey, which is very difficult to police that, is that someone from Mozambique sits in South Africa and has access to an M-Pesa platform, and then then you might find they act as an agent, and then someone wants to send money back home, and then they come to you, and then they pay you whatever it is that you need to pay. But then when you transfer money to the recipient, it's a domestic transaction. We might think of it as informal, and it's a bit difficult to kind of police that. But for those that we can police, Adri, could you maybe get into what the FinServ is then looking to pursue as far as getting into what the FIC amendment looks like as far as recognizing formal and informal money value transfer service operators, and how you're looking to also then follow suit by putting a policy in place in that regard. Thanks.
Thanks, Damola. Yes, and thank you for the opportunity to talk about this interesting topic. So there are two issues that we need to take note of in terms of the discussion that I'm going to have. The first one is in terms of the FATF mutual evaluation and the subsequent grey listing, and the action item that related to money value transfer services. And then the second item that I would like to, the issue that I would like to discuss is then the amendments to the FIC Act that actually assisted us now to get to a point where we can create a framework or a policy for informal money value transfer services, or MVTS. So in terms of the first item, the mutual evaluation action item, that action item said that the authority should proactively identify and take action against unlicensed cross-border MVTS, money value transfer services. So before the mutual evaluation and before the grey listing, South Africa didn't really prioritize the identification and taking action against unlicensed cross-border money value transfer services. There were a few identified cases and meetings with law enforcement agencies did take place, but mostly on an ad hoc or on a case-by-case basis. However, since the grey listing, South Africa has developed a permanent and a sustainable system involving multiple agencies and channels to identify the unlicensed cross-border money value transfer services and subsequent activities. And this is also supported through strong interagency coordination and cooperation that enables the authorities then to investigate and take action against that type of activity. And then the second issue that I would like to discuss is the amendments to the FIC Act. So towards the end of, I think it was 2022, there was an amendment to the FIC Act and the schedules to the FIC Act, specifically Schedule 1, which deals with the accountable institutions. So before the amendments, authorized dealers in foreign exchange with limited authority, or the ADLAs, were listed as accountable institutions, and also the authorized dealers, which we know as banks. And for those two type of entities, there were frameworks in place, and those frameworks are still in place. And that is for the authorization for FinServ to authorize these ADs and ADLAs to be able to conduct cross-border transactions. And the type of transactions and those authorities and the way that they can conduct their business is all listed in manuals, the ADLA manual and the AD manual, which we commonly refer to. And, you know, that type of framework then provides the permissions and the conditions that these entities may operate in terms of cross-border transactions. But then, after the amendments to the FIC Act, the schedule to the FIC Act was changed to say that all money value transfer services providers are now regarded as accountable institutions, not just the ADs and the ADLAs, which means that effectively, the amendment to the FIC Act led to a situation where the informal money value transfer services are also now captured in the legislation. And what that created was a policy gap in terms of the way that we as FinServ authorize certain institutions. So, like I said, there is that framework that is in place for the ADs and the ADLAs, but now we also have to create a framework for the informal money value transfer services. And these include the type of business that is defined in the FATF recommendations. For example, your Awala type business. So this means that FinServ will now have to create a framework that will authorize formal, which is your ADs and your ADLAs type of entities, and also your informal type of entities like the informal money value transfer services like Awala does. But not only from an FIC Act perspective, but also from an exchange control related perspective, because those regulations are still in place for cross-border type of transactions. So what are we doing at the moment? We are in the process of creating this framework, and the framework will cover things like permissible business activities, the duties and the responsibilities of these type of informal money value transfer services, the capital liquidity requirements, if any, type of agent requirements, like the agents we've been referring to, if, for example, they will have field agents, whether they would be allowed to do something like that, settlement requirements, and also important for FinService reporting requirements, maybe a bit simpler than what we know now for the ADs and the ADLAs, but we would still need to understand how much of the value is actually crossing the border. And then also the risk management and compliance type of requirements, and also supervision enforcement type of requirements that we would include in that framework. Then the question was also, so are there any timelines that can be shared? So the timeline that we've set for ourselves would be to draft a framework and to allow for public comment by March 2026. And obviously the success of such a framework, if we implement it, will depend on the uptake by the informal money value transfer service providers. We can set a framework there, we can consult publicly, but they will still need to come forward and, you know, register or be authorized by us. And I think that is going to be a challenge. But maybe through public consultation, public awareness, we will be able to, you know, to reach those type of money value service providers. And then at the end, if everything goes according to plan, we will then have frameworks for what we now call formal money value transfer services, but also for the informal money value transfer services. And that ultimately then links back to the action item that FATF set for us in terms of being able to identify illegal money value transfer services, because that will mean that if you then don't operate or come into the framework for an formal money value transfer service or the informal money value transfer services framework, will mean that you will then be operating illegally. And then, you know, we will then act accordingly to that. So that is the plans that we have. Damola, I know
Thanks.
it's a mouthful, but thank you for the opportunity.
No, thank you for that. And maybe over to Nikki now. Nikki, as you're hearing, you know, some of these awalas might be formalized, which could potentially be a lever for an agent kind of relationship with, say, an organization like yours, where you can utilize them as agents. However, be that as it may, maybe my question to you specifically is around the anticipation of the ability for non-banks to offer wallets in South Africa, and what your concerns are in that regard in terms of how it's currently structured, especially from some of the communications from the NPS around the framework and some of the ideas around the settlement possibilities. Thanks.
Thank you. I can see Arif looking at me when we talk about the new framework. So I think there's just a few things I want to just put on the table so that we're all aligned.
Sure.
Adlers don't like cash. We actually would prefer not to be working in cash, but it's a customer need. The customer wants it. Adlers started 15 years ago. They all were in a cash-based environment, and we've tried to move them, and I'll go back to my Finmark days, into bank accounts, and we couldn't move. They didn't move. So as a rule, Adlers would prefer to not be dealing in cash all the time. And to sort of add to that is, for example, ourselves as a fintech, we have 3 wallet licenses, Malawi, Botswana, and Zambia. Zambia, we're integrating with a switch, and we have 1 banking license in Zimbabwe, which we're integrating into the switch. So the vision is not to be working in a cash environment. The vision is to support our customers and bring them into these digitized environments. So PEM is a brilliant project. It's just too slow. Sorry, Ref. It's just really too slow. I mean, when we drafted the mobile money guidelines 8 years ago, the rest of the region adopted and really allowed fintech and non-bank led e-money. We still don't have that. And PEM is really going to give us something even richer. But the customers, if we want to move them, we need to move them and we need to be able to offer them. And everything that PEM, I mean, we've spent a lot of time, and I think everybody has, looking at the regulation. And there's a lot of stuff there, but there's also double layering of costs sometimes, double layering of compliance, double layering of applying AML, which is what the fintech doesn't. We apply risk-based, and we want to get our customers in. We don't want to cross any lines in regulation. We don't want to be fined. We want to do it responsibly, but it really does need to move. And it'll offer huge benefits to customers. Huge benefits here and on the other side. So yeah, I think that answers that question, unless there's...
No, thank you for that. I mean, for the benefit of time, we will have maybe just one last round of questions, and then we can wrap up. Is everybody happy with that? Okay, so I'm going to come back to Ntate Sekwati, and we're going to talk about the ShopRite product, which is cash-based. And we're speaking about cash and the need to go towards a digital mechanism and how one actually manages the commercial incentives to digitize at the last mile. So we thought maybe you could share with us what the position of the CBL is in this regard, so that we can stop our grannies from going to queue the whole night and maybe have a way of getting money into their wallets. Thanks.
No, thank you very much. Over the past few years, we authorized a partnership between Standard Bank Group and ShopRite to allow money transfer from South Africa to Lesotho, and I'm aware that this is also happening in other corridors in the region. When we authorized this, there was also emergence of other mobile transfer operators, the likes of Mukuru, a lot of bilateral arrangements between service providers in South Africa and Lesotho around the mobile money space. And surprisingly, over the time, we've seen this ShopRite product becoming so popular. And the value proposition around this was that ShopRite would provide cash out arrangements to the people who are receiving money on the Lesotho side. And with the understanding that they'll use this money to actually buy groceries or things from ShopRite shops. But in reality, people go there, cash out this money, they need to go and pay school fees and do other things. So yes, somehow the model is working for them, but people are not using this money in the ShopRite shops to a larger extent. They're using it for other things. And our concern from the bank has been that you see a lot of queues. One, because there are not so many ShopRite shops and they're not so well spread throughout the country. People move long distances to come and queue at ShopRite. And even when they are there, there's no guarantee that they'll be able to get money on the same day. So there are some liquidity issues there, because sometimes maybe there's not enough cash in the shops. So that's a challenge, and we've been in with ShopRite and Standard Bank to see if they can consider partnering with the other service providers, for instance, M-Pesa by Vodacom and other EcoCash, to see if this money can be sent directly to the wallets. While I think we're making progress, but to a large extent, I think there's a resistance from Shoprite itself, because now this is not in line with their model. Yeah, so it's really one pain point that we're dealing with. But we see one popular platform that is being used for remittances that we think with our interventions it can be improved and even make even much better. So that's what we're dealing with.
Thank you.
Yeah.
Thank you for that. Nikki, I'm going to come back to you, and then I'm going to end up with Mr. Smile. Nikki, from a service provider perspective, could you maybe give us your top 3 pain points that we should be thinking about going forward?
Okay, I think some were raised earlier. The EKYC, data protection, data privacy issues are becoming very challenging, having to have it in the country. So it's not about getting the information, it's about where it's stored. We have some countries that are insisting that all transactions are also done in country. So that whole data privacy and localization adds costs. When you're multinationals, what you want to do is you want to leverage one set of technology for everything. So that is a huge pain point for us. And we're going through DPO and that sort of registration, which is very onerous. So I think the EKYC centralized and what we want to do is quite important. I think the second one is sometimes trying to really define the customer value proposition and explain. So with the Shoprite, I mean, Shoprite's been a challenge for 10 years, but you know what? The customer wants Shoprite. And no regulation, no new solution, no bank account is going to change that. There are other things that impact that. And we also struggle with that at times. We do partner as much as we can, but I think that's quite a big thing. We get asked, why aren't you in TCIB? Why aren't you doing this? It's about your model and your customers and what is needed for them. And I think the third thing is potentially disproportionate compliance for low value transactions, which becomes really tough because none of us want to be fined. None of us want to, compromise the integrity of the financial services system. But there is a balance with financial inclusion and low value transactions in how you can manage it appropriately. And the cost of compliance is starting to affect business models in those low value transactions.
Thank you. We're going to end up with Mr. Smile, but I wanted to maybe go back to Adru before we get to Mr. Smile. If there's any pressing point that you might want to raise, given what we've discussed tonight and the findings.
No, I think the information that was displayed and the information that was part of the market study that we did on the Awala and the influence and the impact that they actually have in South Africa. And even though, in terms of the previous study and this study, that the amounts were lower, the fact of the matter is that they do operate in South Africa. And, we can't close our eyes to it. But we will have to find a way to bring them into the market. So I think it's definitely going to be a challenge for us, and also, to ensure that there's, not that arbitrage and, that unhappiness in terms of the formal industry as well. But that is something that we would have to challenge in the way that we authorize these informal money value transfer services. So yeah. That's my final. Thanks.
And then for the final word from our panelist, Mr. Smile, we've talked about the domestic around what the first mile looks like. Within your capacity as the CCBG PSS chair, what do you think the vision is, or what is your vision in terms of moving this forward from a cross-border mechanism perspective, as far as, adhering to some of the international standards or policies around this issue?
Yeah, thank you so much, and that's an important question. So, interestingly enough, I think Ndata Tim actually, in his remarks, captured quite well what needs to happen. Let's say it from a CCBG and PSS perspective. So, I'm going to end with 3 C's.
Sure.
Right, and hopefully it's catchy enough. And all 3 C's, interestingly enough, about commitments. Right. So, The first thing I think from a vision perspective in terms of what I think needs to be done is commitment to the hygiene factors, the must-haves. And I think Ntate Tim captured that brilliantly well, so I'm not going to replay that, but absolute commitment. Okay, the second one is probably then commitment to the models or the solutions that the PSS wants to pursue. And I'm delighted in saying that as we discussed, not so long ago, 2-3 weeks back, there's one particular model that's become quite clear. And it goes back to the kind of things that I think Nikki was talking about as well. But the ability to interconnect different country systems, especially fast payment systems, right, through a hub and spoke model is quite key. And that commitment is made and will be firmed by the CCBG. And then the third commitment is we can't forget then that whilst you might commit to hygiene factors and you might commit through solutions, but as a bunch of regulators and central bankers and so on, we've also got to commit to being catalysts, okay, political activists for the solutions and for the changes that need to happen. I think Maxine raised that in our discussion as well. So let me end with that. Thank you very much.
Well, please give the panelists a round of applause and thank you. I'd like to call on Brendan to close the session. Thank you for your attention. Thank you, guys.
Thanks to the panel. I was a bit disappointed to hear the complaints about the ShopRite model, because when we did it, it was revolutionary. Everybody loved it. Now it's become a problem. So the more you solve one problem, the more you create another one. I think we're running late, obviously, and I can see you guys are tired. So what we're going to do is we're going to skip the Q&A session. I think there were 2 questions online. We will answer those questions and send it through. So I hope that's okay. We're about to finish, but what we wanted to do is take this opportunity to say farewell and thank you to Tim. Tim, please join us here. Join me here. This is a surprise. Tim didn't know about this. So I'll say a few words about Tim. I met Tim in 2010, 2011. So we go a long way back. He wasn't the boss then. He was an employee. Key. I think you were responsible for operations or Samo system. Yeah, together with Gobst. The two of them were always together. But when we started looking at this work, 80% of remittances were informal. The costs were 20% and above. Sometimes it was cheaper not to send the money because you end up paying more money than you send in. The banks were the only game in town. There were no non-banks playing in the space. AML, CFT regulations was killing this market. Basically, that's what we were dealing with. So we started this process. My first impression of Tim was that he looked like a central banker. He dressed like one. But he thought differently. No offense to central bankers. This is 10 years ago, right? So you all were not there. Some of you were there. But so with Tim, he thought differently and he responded differently to what we were trying to say. Others were trying to keep us out. What are you talking about? How can you drop AML regulations? What about terrorism financing? Jean, you remember those debates. We used to have huge debates in the boardrooms at the Reserve Bank. And what we were selling is an idea that the more inclusion you have, the more visibility you have, and the more you're able to detect AML, CFT transgressions. And the response we got from the central bankers is, but hang on, even if it's low value, one person or 100 people can send one transaction to one person and then they can buy guns and stuff with it. So those were the debates that we were having. Tim Tim was, I think, throughout that process, was committed to doing things differently. At that time, I think it was not a common thing for central bankers to think in that way. And so that's how we encountered Tim through that whole process. Tim, together with Elijah, may his soul rest in peace, and Jean, who is sitting there now wearing a Finmark Trust thing on his. That's a sign for you, Tim. Were the people that actually shaped this process. So some of the key interventions were opening up the licensing to non-banks, right? So creating more competition in the space. I think that was 2016, somewhere around there. That was a game changer. And that's the result you can see today. Non-banks are basically running the show, right? It started there. The second one was around the AML exemptions that we were beginning to have before RBA came in. A number of exemptions that we talked about, and I remember long conversations and debates around how can you structure it, what's the ceiling that you need people to transact, all of those things. But that basically started opening up the market. In fact, what it did, and it's still the case in South Africa, there's no one here from Home Affairs, right? Or online from Home Affairs. But what we achieved is to separate your legal status in the country from your ability to use formal financial services. That's effectively what's happened. And so if we had not done that, during COVID, the suffering of families in the SADC region would have been tremendous, or a lot more. Because when COVID hit, many of those undocumented migrants used the formal systems, right? And that's why you see the numbers jumping during COVID, because the borders were closed. All of that work basically resulted in that kind of impact that we have. And so when we approached Tim with some of these initiatives that we had, we never wore ties or in those boardrooms. We looked very underdressed. They must have thought, who are these crazy people suggesting all these things? But Tim and a few people, I think, were key in taking this lead. And I remember one of Tim's, I can say this now, Tim, one of Tim's views around banks dropping pricing was that banks need to, if we drop AML requirements, banks need to demonstrate that they drop their prices, right? And we need to put pressure on banks to make sure that that happens. And I think at one point, Tim was even talking about making it compulsory for those to drop. It didn't get that far, fortunately, but that was the thinking around challenging the status quo. And if that didn't happen, I don't think we would be sitting here with these kind of numbers and the changes that have happened. I think the other big thing, and again, this is the Lesotho thing that everybody is bashing now, right? The pilot that we did in Lesotho, we approached the Reserve Bank, and again, Elijah, Tim, and Jean were key, instrumental in approving that pilot. It was the first of its kind, cross-border. It never existed before. The fact that they went into that arrangement with us, completely different to how Reserve Bank doesn't normally do those things at the time. And so that visionary leadership to say, let's try this and let's see if it works. That product went from 0 to R1 billion a year in 3 years. I mean, products don't break even. It exploded basically, and opened the doors for Eswatini corridor and for other corridors. The other one, I think, for me more recently is this program, the digitization program. When we approached him to say, you know what, let's do this program, let's partner so that we can do practical pilots within township areas and other projects. Things that a Reserve Bank doesn't do these things, right? So in that partnership, it allowed the Reserve Bank to have an eye or an ear directly into what's happening in communities to inform regulatory processes. And so we brought the Swiss with the funding, and Tim championed it within the Reserve Bank. I'm not sure that was done before. I know there was a partnership with BankServe at some point, but BankServe is hardly a small non-profit like ourselves. But the fact that that model has been working, and I think it's produced value, is Tim's doing, and jumped on it and said, let's do this. let's put this together. And I don't know how his bosses agreed to it, actually. I still haven't asked him how that happened. But it means this is the new way of us thinking about partnerships. These are not problems that anyone can solve on their own. We need to be coming together to make sure that this works. So Tim, yeah, thank you very much. I think the families and people within the SADC region owe you a debt of gratitude for taking those initiatives that resulted in huge, I mean, we have quantified how much people have actually saved from the reduction in cost over the years. We have done that you know that, and it's a huge benefit to people. And of course, we have a long way to go, but I think the foundations have been laid firmly. And I think, I'm not saying this, you know, Tim and I we don't visit each other, we know each other, but we don't drink wine together. But really, Tim, the visionary leadership that is provided to this work, I think, is something that we should all be grateful for. So thank you very much, Tim. I'm not sure what your next move is, but we do have a desk at Finmark on a voluntary basis, of course, because I'm not sure we can afford you. Ask Jean, you know, it's almost voluntary, the work that you do. So you're welcome. So thank you very much. Just a word to Arif. We look forward to working with you, Arif, in the same way. And maybe some advice to you is, when people talk about big shoes, you know, when people leave all the time, they talk about big shoes that you have to fill. Yeah, tell them you bring your own shoes, right? And you'll put your own stamp. Yeah, you'll bring your own style and you'll put your own stamp and you'll wear your own shoes. Tim's may not be suitable for you. So Tim, thank you very much for all the partnership that we've had. We've got a few gifts for you as a token of our appreciation. I'm not sure if you want to say something, because we caught you by surprise.
Yeah, no, never. I didn't expect this, but so I hope you like my shoes.
So the first gift is a copy of this cover, this report, the cover page. This is my signature there, Tim, in case don't put it in the bin when you get home. I'm sure you've got lots of these. And
this is beautiful. My study has got something
yes.
to it.
And I hope you enjoy this in your free time. Thank you very much, Tim.
I think I'm
going to say a few words.
I'm going to need the pack, but colleagues, I think all I can say is that this was collective effort, and I'm glad that one of my colleagues from the region, Mr. Mutetsi, is here. It was not a dictatorship, and from the private sector side, we adopted a public-private partnership, and all through the journey we had SADC Bankers Association alongside, and bringing the private sector voice. And within the bank itself, I think I could just say, Brendan knows that when we launched the SECO program, I think we were at the ambassador's house, the governor was there. Yeah. That support from the top is what makes things possible, and I think I enjoyed that during my tenure, and I can assure Arif that I think he's going to get it. And I think for the market and Finmark Trust and the rest of the colleagues, I don't know where I will be with the desk that Brendan is offering. The system is in good hands. Arif and the team, we have a team that is open-minded at the SAP, and with the sister regulatory functions of the bank, we have Olano here and his colleague Adri. I think you should rest assured that we will, as the SAP, I mean, I'm still having a few days, we will always do the right thing. And I thank you, Brendan.
Thank you very much, colleagues. We've come to the end. I look forward to working with all of you again to make things better for the people in our region. They deserve it, and we have the power to make it better. So thank you very much for attending. online, please, thank you very much for staying with us. We've got some drinks and cocktails outside. Please grab some and, stay as long as you want. Thank you. Thank you very much.